Yes, my people, welcome back to the channel. Today we'll be covering ICT Power of Three. So it's essentially the ICT Power of Three goes over accumulation, manipulation, distribution. It says that the market does something along these lines. So we've got our accumulation phase, which is where we essentially accumulate orders and we build a bunch of liquidity. It looks something like this. Then there's manipulation, which is essentially a sweep of buy side or sell side. So it looks something like this. And then we have our distribution, which is the market after sweeping either buy side or sell side, goes towards the opposite direction and then does it all over again. Um, this is really similar to Wyckoff in a lot of ways. The fact that the market moves in cycles of accumulation, manipulation, distribution. I have a whole video on Wyckoff if you're interested. But I've recently got quite a few emails about this, which is interesting. And I actually do use ICT's Power of Three. The concepts of accumulation, manipulation, distribution, I do use, but I do think that there is just too much overcomplication on the internet with regards to the ICT Power of Three. And so I'm giving you guys a very simple strategy based on the ICT Power of Three. You can trade this on AUD JPY, CAD JPY, GJ, and gold. So only these pairs is what I found this strategy works for. Um, so backtest it, forward test it, and stay tuned till the end of the video for the last example, because that example is always the most interesting. If you know my channel, if you're a fan of the channel, you know that. Please like, subscribe, all that good stuff. Um, we're slowly growing. We just hit 700 subs. Super proud of that. Thank you guys for the support. I appreciate every single one of you. If you do like actually learn something from my videos, let me know. Because genuinely, I'm pretty new to this whole YouTube thing, and it's nice to know that someone is finding my content useful. Because it does take a while to record and edit these videos. Let's get straight into it. So, what does the ICT Power of Three Simple strategy look like? Well, essentially, we've got the trading plan over here. So we're trading this strategy from 8 to 10 p.m. New York time, which I think coincides with Asia Open. But 8 to 10 p.m. New York time, which is UTC -4 on TradingView. We are marking out our 15-minute high and low just before our trading window. So this is 8 p.m. New York time. This is 10 p.m. New York time. We are marking out the 15-minute low and the 15-minute high. And you can see we've done that here. We can even, change the color of this just to make it a little more clear. So this is our 15-minute high. This is our 15-minute low. Right? We are then waiting for the high. So we're either waiting for this high or this low to get swept. So we are waiting for buy side or sell side to get swept on the 1 minute time frame. So as soon as we enter our trading window, which is from 8 p.m. to 10 p.m. New York time, we are immediately switching to the 1 minute time frame and we're waiting for the high or the low to get swept. As soon as the high or low gets swept, we are waiting for a market structure shift paired with the formation of a fair value gap. So we are waiting for, I'll write that here. So we are waiting for a market structure shift paired with the formation of an FVG. We then enter off the fair value gap retracement. And it is as simple as that. There is no need to overcomplicate. It is as simple as that. So you can see here, price does its thing, comes down, sweeps the 15-minute low. We then get a break of structure to the upside, which is our market structure shift with the formation of this fair value gap. I'll change the color just to make it clear. So let's make it blue. Let's increase the opacity. So there's our fair value gap, pretty clear over here formed in this leg upwards. We then wait for price to retrace. So you can see we wait for price to retrace to come down back into the fair value gap, and we enter off the fair value gap targeting the opposite liquidity. So if we've swept the sell side, we are now targeting the buy side. If we've swept the buy side, we're targeting the sell side. I'm a really conservative trader. I won't lie. When I was a beginner, I used to watch YouTube, and I'd see a lot of traders saying like, don't settle for less than 1 to 5 RR trades, 1 to 4, 1 to 7. Honestly, I very rarely catch trades that big, at least for my first TP. Like my risk appetite is super conservative, and so my first TP will always be at like 1, 1.5, 2 maximum. So I close half my position, trail my stop loss, then I let the trade run, risk free. But with this setup, you're aiming for, 2 RR TP for your first TP. And I think that'd be realistic. And that's it. Your stop loss just outside the fair value gap. So here the stop loss would be here. And that's it. It's as simple as that. And then you eat, you take your win, and you close your charts for the day. That is this setup simplified. So we're marking out 50-minute high and low, waiting for a sweep of the high or the low. We're waiting for a market structure shift with the formation of a fair value gap. We wait for retracement into the fair value gap. Our entry is there, targeting the opposite side liquidity. 1 to 2 RR. Be conservative with the trade. Back test, forward test before you take this trade. Let's hop straight into the first example. Again, if you've learned something so far, please like, comment below. Let me know if you've liked it so far, if you have any questions, and please subscribe to the channel. I'm trying to hit the 1K subs, which would be nice. Let's head into example one. All right. So first example one. Um, this is gold. 23rd of on the 3rd of June. I think this is a trade I actually took. So we're into the 15-minute time frame. We're clearing everything. Let me clear, remove drawings. Let me clear my indicators. So let's follow the trading plan step by step. So we're marking out 8 to 10, and let me bring this back here. So we're marking out 8 to 10 p.m. New York time. We're then marking out the most recent high and low of interest. So here's our high, and here's our low. Pretty obvious. All right, we're then switching to, okay, we're then seeing what happens. So let's go candle by candle. As soon as we enter 8 to 10 p.m., we're switching to the 1 minute. So we're now switching to the 1 minute. Let's see what happens on the 1 minute time frame. We're waiting for the high or the low to get swept. Let's see what happens. So keep going. Bam. We take out the high. What am I looking for now? I'm waiting for a fair value gap to form on a bearish candle, causing a break of structure to the downside. So I'm waiting for a break of structure, then I'm waiting for a fair value gap. I don't see that yet. All right, let's keep going. Let's see. All right, so here's a fair value gap right here. We see a fair value gap. We've got our break of structure to the downside. We can see that we were bullish, we're bearish. The break of structure actually happened somewhere here. So we can see we've got a lower high that forms here. So our break of structure technically was formed here. But since we didn't get the fair value gap until here, our entry is going to be off of this fair value gap. So I'm entering off this fair value gap, targeting our sell side liquidity with our stop loss just above the liquidity. So just above the buy side liquidity. Because you really want to be conservative with your stop loss. Don't stop your, have faith in your setup. Don't stop yourself out with a super narrow stop loss. Because we can see that the fair value gap is really narrow. So I wouldn't risk it by putting my stop loss over here. That's just a recipe for disaster. So I'd let the trade breathe. I'd put my stop loss somewhere here. Because relative to where my sell side is, that is still a pretty conservative stop. We can see that, we're going for 3.5 RR for sell side liquidity. My first TP would be at 1 to 2. So let's see what happens. Let's see how this plays out. We go into drawdown for a little bit. We can see that if we were narrow with our stop, we would have been stopped out before price actually went to the other side. So stop loss over here. Let's see. Does this hit TP? There we go. Smashes TP, and I would suspect that ultimately it actually takes out sell side. There we go. And it ultimately takes out sell side. So you could have actually you could have actually put your first TP at 2 and then ultimately ride the wave down to 4 RR. Simple. It's a pretty simple strategy. 8 to 10 p.m. New York time, mark out 15-minute high and low, wait for buy side or sell side sweep, then switch to the 1 minute. Actually, you can also switch to the 1 minute as soon as you enter the trading zone. As soon as we sweep either the buy side or the sell side, we are now looking for a market structure shift followed by a fair value gap. And that is our entry. And then we're looking for 2 RR for our first TP and stop loss just outside the FVG or outside liquidity level, depending on distance to the opposite side liquidity. All right, so example 2. Step 1, we mark out, so this is gold, 25th of June. We mark out our window, 8 p.m. to 10 p.m. Let me bring back the candles to just before our session. Let me mark out the high on the low on the 15-minute. I see our high over here. I see a low over here. Though we could even take this to be our low, but I like to take the most recent low. We now switch over to the 1 minute just as we enter our trading window. And now I'm waiting for the high or the low to get swept inside our window. So I'm waiting for a high or low to get swept and then looking for a break of structure. And until okay, perfect. We've just swept the high. So now what are we looking for? Let me untick all of these so everything goes back to normal. By the way, I suggest you write down this trading plan before trading. I always have my trading plan on screen in front of me, and that way I don't get emotional when I trade. So we've waited for the buy side to get swept. Buy side's been swept. I'm now looking for a market structure shift with a fair value gap. And then I'm entering off the fair value gap retracement. I'll use this indicator right here to test for, so I'm now looking for a bearish fair value gap. No fair value gap yet. So until I see one, I am holding on to my horses until I see a fair value gap, because we do already have the break of structure to the downside. And there we go. Tiny fair value gap. Is tiny, but it's there. So let's mark out the fair value gap. It's a very small fair value gap over here. But that fair value gap is enough for me. That's enough confluence for me to enter the trade with a short position. So I'm entering just off this fair value gap. I'm putting my stop loss just above my buy side liquidity, giving enough breathing room for the trade. And my take profit will be at the sell side liquidity, 1.8 for my first TP. Then I trail my stop loss. Let's see what happens. Are we tapped into the trade? Does price tap us in? Yeah, so price doesn't, or does it? Okay, there we go. There we go. Perfect. So we retrace into our fair value gap. We get our entry. And now we are aiming for our sell side. Amazing. Amazing. So that was a textbook play. It took a while for us to get tapped in, but trust the process. And that's it for our second example. This is essentially what the power of 3 is. Please like, subscribe to the channel. Watch out for the trading community in that'll be in the comments in the description section of the video. And yeah, let me know if you have any other questions. I'm still pretty new to this YouTube thing, you know? I've been doing it for a couple months now. So I appreciate any feedback. I appreciate you boys. Just hit 700 subs, which is crazy to me. Yeah, stay safe, boys. Take care.